Good morning, space traders. Hope you guys are doing fantastic. I am the rocket scientist. I want us to go right into me teaching you 3 or 4 different analytical tools that you can look at to help you determine whether a stock is overvalued or undervalued, overpriced or underpriced. So let's get right into it today. Let me go ahead and share my screen. We're going to take a look at SunPower right here. As you know, I've been promoting SunPower. SunPower is currently up 5.61%. I'm using the Ameritrade platform right here. I've gone down and you can set actually your time frame, and I've set it for 2 days because I want to show you what happens in pre-market. Pre-market is the 3 hours before the market, 2 to 3 hours, where the big dogs are playing. As you see the line right here, this is 9 o'clock. And this is exactly when the market opens for the general public, those people that have typically less than $25,000 in their account. So you can see at 9 o'clock, this stock has started to jump. What happened in pre-market? In pre-market, it was sold off, which kind of goes maybe about right here. And this is where the big dogs play. The big dogs play with a higher volume. If you take a look here in the upper right-hand corner, you're going to see volume right now is trading at 1,542,000 shares. Volume is the buying and selling of shares. Now, this stock typically trades on an average volume of 4.42 million. Well, how do you use that to your advantage? Let's go ahead and look at the 1 day right now. As you can see, the stock is already gaining right now. The big dogs who typically sell and buy in larger volume, which leads to greater ups and downs, they used 1 million, maybe about 1 million of the volume to sell off. Now, the stock is beginning to grow. And as it grows, if you watch the volume, you will see the volume will increase. The more it increases, the more this stock is going to tend to grow if the stock was dumped early in the morning by the big dogs. The little dogs are now seeing the value, getting a little impatient, and jumping on it. So that's volume right there. When the volume actually gets to a typical day volume, the average, and in this case, the average is 4.42 million, that's when things usually tend to settle, okay? Settling time typically on a stock is about 9:30 to 10:30, but that's just a general reference. You know, sometimes smaller stocks and speculation and pieces of news that come throughout the day, those things all affect the actual up and down of a stock. Next thing I want to take a look at here is the PE ratio, and I'm highlighting it right here with my little white hand, little Michael Jackson glove going on. The PE ratio is one of the most widely used metrics to determine overvalue or undervalue of a stock. And PE simply means price to earnings. The P is the price of the stock, and the E is what is the stock earning. So as we can see here, the PE ratio is 10.4. Well, is that good? Well, that's a very convoluted question. So let me give you some generalizations. The S&P 500, any stock in there typically has a PE ratio of between 13 to 1 and 15 to 1. Now, the higher the ratio, the more that the stock is trading on hope and future earnings, okay? Stocks like Tesla, for example, are trading right now at 100 to 1. PE ratio. That doesn't mean that's a bad thing. I mean, if they have an amazing product and they're going to keep selling it, yeah, okay, invest in that company. If you believe it's going to go from a want to a need, that product, which in Tesla and its auto driving, self-driving, autonomous software, yeah, then I think it's a great thing to invest in. But be careful, because the higher the PE ratio, the more you need to ask yourself, is this company going to grow? Okay. Now, a low PE ratio is great. This PE ratio is actually 10 to 1. That means that this is a good value right now. because the price you're paying to earnings has a very profitable return currently. And the last thing I want to talk to you guys about today is support and resistance. As you can see here, we have kind of a Six Flags Magic Mountain curve going right here. We don't see any support or resistance yet. Support is when a stock will get to a certain mark and kind of just bounce around. You see what I'm doing with my little moose here? If it was to just bounce around in one small area, kind of like a really shitty roller coaster, okay, not a lot of bumps, not a lot of dips, that means it's hit support. That means it's kind of hit the bottom. And chances are it's going to pop back up, barring any news or changes in bond rate, interest rate. You know, the company catches fire, the employees go off to war to fight for peanut butter and jelly time. That is what support is. Now, resistance, at some point today, there's going to be resistance. This stock has been steadily growing today, opened up at 9 a.m., plunged just a teeny bit, and then the small dogs took over. But resistance is going to be, again, where it's grown, and then maybe it's at an all-time high, for example, or just a high for the day. And it hits resistance, where again, that shitty roller coaster, not a lot of ups, not a lot of downs, just stays at one level. And that tells you that probably it's going to drop, or it could drop, okay? But a change is going to happen at some point. Hope this has been helpful. Remember, at Space Traders, some people can tell you the price of a stock, but we tell you the value. All right, mahalo.